The question that everybody asks themselves is, could I build this in a weekend? Today, anybody can build a company really, really fast. First mover advantage, that's really gone.
When you invest now, you hear a lot that the SaaS is dead, AI is eating SaaS.
If your software just looks like a database with a nice UI on top, I think you're definitely dead. There's a whole layer of companies that will disappear exactly for that reason.
With this wave of AI, what changed, if anything, in assessing investment opportunities? You mentioned something like the quality of founders. How do you assess the quality?
The best founders, they all had a couple of common traits, but the clearest trait for me was...
When you meet a company, like how do you assess if they can have mass success?
I think about companies that because there's such a hunger in the market. So I think that's where you can really make money. We looked at the dating app in China. They were adding 10 million users a week.
Wow.
That seemed incredible. And I was thinking, like, this is the population of Belgium. So it made me think about like the scale. Despite what we read in the news, there's no overnight success. What you see in the news is kind of like just a snapshot of a movie that actually had started a long time ago.
Alrighty, so let's get started. Thomas, how are you doing?
I'm great. How are you doing?
Yeah, pretty good. I'm actually very happy I'm in Zurich right now. And the last 3 days were horrible. I mean, the weather just like gray and all the friends that I have in Zurich, I must admit, most of them are Norwegians that ran from Norway after they introduced the different type of taxes, taxes on unrealized capital gains, exit taxes. So I kind of messaged them. I was like, hey, let's meet. And I'm like, let's push it towards the end of the week because maybe it's a little bit more sunnier. Maybe the sun will come out. So today is the day. Hopefully it's going to stay the same. So it does feel a little bit more like spring now in Zurich. You also said that you're in Paris this morning. I would assume that you travel a lot. What brings you to Paris?
So we have an office in Paris, which I visit quite often because we do a lot of transatlantic investments. I'm here quite frequently.
So when you do the transatlantic investments, do you, for example, is there like an arbitrage? You see what works in a market and then you know that maybe Europe is lagging a little bit behind and then you know that that type of investment will appear also in Europe? Or how do you look at a portfolio level?
Well, I think the way I think about it is about talent, right? First and foremost. So I think in Europe there's a fantastic pool of talent. So I'm spending time with this kind of a great pool of talent, and we often talk about America, right, and how to crack the US market. So that's the essence of most conversations I'm having when I'm in Europe.
So how to crack the US market?
Absolutely. Everybody wants a piece of America.
Everyone wants a piece of America. Did you find the secret sauce?
I think there's no secret sauce, but I can point to people about mistakes they should not make, and that in itself, I think it's a valuable lesson. So we've seen what doesn't work, and I think those lessons can be very valuable for people who are just about to go to the US or are thinking about it.
Absolutely, and I mean, you have a very international background. You were born in Belgium, raised in China and Japan. You studied in the US and Australia. How did growing up across all these cultures shape how you look at the world?
So I think it was a really great experience for me because I grew up in China basically when I was a teenager, and at that time China was seeing a lot of change. Right, it's not what it is today. At the time, like everything was changing really fast. So I remember when I was a child, we would go back to Europe for the summer holidays, and when I was coming back to China after the holidays, everything had changed. Right, none of the streets looked the same. So the pace of change was just so fast, and the pace of innovation. Everybody was starting a business. Everybody was coming to China. So it felt probably a bit like Silicon Valley at the time. And then when I went to Japan after that, it was the opposite. Right? Japan, like very mature market, businesses that existed for hundreds or thousands of years. kind of very low change ecosystem. So it kind of like taught me how things can be very different in different countries, and how differently people can think. And after spending time, in US, Europe, etc., then I realized, the way you think in one place is very different from the way you think in another. So I think it just opened my mind to a lot of different ways of thinking. Yeah, it was quite a fantastic experience to have.
And just drawing from that experience, do you think it's important for entrepreneurs to surround themselves, or like to put themselves in an ecosystem that is moving fast? Like, do you think that kind of rubs on oneself? Like, do you think if you try to start a company in Japan, most of the peers or everyone around you will be, yeah, but this is not how things are done. But if you're in Shanghai and everyone wants to start a business, the pace is very high. Do you think actually that's much, much better?
Yes, I think it puts things into perspective. And I can give you an example. When I did a bit of investing in China, and then we looked at a dating app. Actually, in China, it was like a Tinder copycat at the time. And I remember they were adding 10 million users a week.
Wow.
That seemed incredible, and I was thinking, like, this is the population of Belgium, that you're adding in a week. Uh, so it made me think about like the scale of things, and the scales things can take. So I think when I meet companies now, when I meet people, I'm thinking quite differently about hyperscale and what your massive success looks like.
What do you mean by that? Like, when you meet a company, like, how do you assess if they can have massive success or scale for that matter?
I think I think about companies that have extreme product market fit, right? And some of them, and for like, I think ChatGPT was a good example, right? When they released the first version, they were adding users like no tomorrow. So and you can see that when a company has great product market fit and they're tackling a huge market, I mean, there's no limit to how fast they can grow. And I think that's kind of the VC dream, is kind of finding those companies that have brilliant product market fit in a huge market.
And for founders listening to this, they might say, yeah, but ChatGPT had, 5 years of building, a lot of millions, they had the trust of their VC. Whereas, like, I know that probably that's the mindset in the US. Maybe now Europe starts to pick up. But I think in Europe, at an early stage, and also now, you need to show quite a lot of things before you can get the investment. Like, how do you see it?
I think you do. There's always a phase of building, and there's no, despite what we read, I think in the news, there's no overnight success, right? Even when we see AI companies going from 1 to 10 million, often founders have been building for a while, or they've been thinking about it for a while. So I think what you see in the news is kind of like just a snapshot of a movie that actually had started a long time ago.
Absolutely. I mean, I know that you invested at pre-seed in Lovable, but Anton was building with GPT Engineer. He saw the traction on GitHub, so he saw all the right signs. So then when he actually launched Lovable, he knew he had some, intuition, but also data that what he's building is going to be needed.
Yeah, it actually wasn't an overnight success, and I think the idea had been brewing in his mind for a while, right? Even for more than a year, I think even longer than that. But he already had traction, a community, etc. So when he built Lovable, it wasn't like he was starting fresh. There was something pre-existing, and I think a lot of people look at the story and kind of miss that that part.
And I was wondering, what was your first investment? I looked on LinkedIn a little bit, so I scrolled as much as I could, so I kind of found Next Insurance, but not sure if that was your first investment. But I was curious, how did you get into investments?
So that was so I came to investment a little bit by accident. So I used to work in private equity, which was a very, very different way of investing. You look at mature companies, etc. But I got a little bit frustrated when I was working private equity, and I wanted to really see companies at inception. So I was always playing around with company corporations. At the time, I was living in the UK, and I was trying to find like what type of people create companies. I was always like fascinated by this process. And as I was looking for new companies, I was like speaking to teams just out of curiosity, and it was really exciting to me. But I wasn't working in VC at the time, so I was sending leads basically to my friends in VC, and that's how I got my first job in VC. Right, basically. The Samwer brothers approached me. They were building, Rocket Internet GFC at the time, and they told me just do what you're doing now, but apply it to early tech companies. So I came into an industry that I had no clue about. So it was a steep learning curve for me. But I got lucky. So I think in my second or third week on the job, I decided to fly to San Francisco, and I thought, this is where things are happening. Let's have a look. And I met this company, Next Insurance, and I was just amazed by the quality of the founders. And I knew nothing about venture, right? But the only thing I knew is that those were really impressive guys, right? That had like a very clear vision that made sense to me. And then I said, let's invest. We have to invest in this company. So you might call it beginner's luck, or maybe I didn't have the biases that I have now, but that turned out a pretty good first investment in my VC career.
I remember watching this TED talk by Elon Musk, and I was just transitioning from my engineering degree to finance. So I was like, yeah, I mean, like I need to learn how to invest into the public markets, what to do. It was the opening of the MOOCs, massive open online courses. I took a course in finance from University of Michigan, and then, okay, I want to invest. I think I want to invest in Tesla. So I watched this video with Elon Musk, and I need to admit, it was not an investment. It was not like a financially good investment based on what I've learned from University of Michigan. But when I saw his talk, the clarity of the vision, the ambition, the vulnerability, how personal he took everything, I was like, okay, I'm going to put, I don't know, a couple of thousands of euros. It was like $10 back then. But it's funny because, it has actually nothing to do with finance. And I think, to your point, most of the times at early stage, it's all about the grit, the chip on the shoulder, the clarity of communication of the founders that really convince you that you want to back them, because they will find a way, they will just find a way.
Exactly. They will find a way.
And you mentioned working with the Samwer brothers. I was wondering, because I had one or two colleagues that also work with them. Like, do you remember a couple of instances and moments with them? I mean, I've heard that they were quite intense, in particular, like maybe Oliver.
Yeah, I think the intensity, I think, was very unique at this place. And I think that it was a good crash course for me, and I still carry actually the learnings from today. But they were relentless, and I think Oliver in particular just wanted to win at all costs. He just hated losing. But something that was very special, I think, about him is that he never really took things personally. So sometimes founders would, reject him, and he would just move on. He would lose a deal, he would just move on. So he had this ability to just keep going no matter what, and no matter what blockers were in his way, would just like work to remove them one by one, one by one, one by one. It was quite impressive because he was running a global firm, but at the same time, it felt like he was everywhere at the same time. He would come to London, and then the week after San Francisco, and then Paris, and then Munich, and even went to China, to like all kinds of places. It was just meeting founders relentlessly, and then he would spend 10, 15 minutes with a founder and make a decision, on the spot. And I think that's very rare, and I've never seen a firm operate like that actually today.
No, it's incredible if you look at the quality of people and talent that came, after Rocket Internet. How many of them have launched firms? How many of them have launched businesses? Is just incredible. So to your point, I think is like one of the best crash course that you can get into, let's say, company building. Like a previous colleague of mine, David, which actually I saw that you also invested in Creative Fabrica,
That's
right?
yeah.
We did the seed round in Creative Fabrica. So like they were like he was telling me like Oliver just wanted to go and build this marketplace in Myanmar, but they didn't have ATMs. So I just had to go and take 50,000 euros, put it in my backpack, and just go in a plane and go to Myanmar. It's just crazy. It's just, but it is something, like if we go back to, let's say, how Europe now has second generation of founders, once you see what's possible and the speed, then that stays with you and you can try to replicate it. So once you are exposed to that type of growth and the potential, then you will try to do it again and do it again. So I think, shout out to Rocket Internet and all the hustlers that kind of came out of it. Also, I saw that you recently joined RTP Global. Do you want to tell us maybe a little bit about RTP?
Yes, I think so. RTP is it's an early stage global firm. It's been around for quite a while, and the firm was built on the success of one early stage investment, a little company called Datadog, where the founder invested very early on, and this a few $1 million bet turned into a substantial outcome. And today we are essentially recycling the proceeds, right, of that investment. Our latest fund is $1 billion that we deploy truly globally. So in the US, in Europe, in India. So it's a truly global early stage firm, a little bit similar actually to what GFC was back in the days. And we try to invest as early as possible in global talent. So that's the sole focus of the firm.
Wonderful. I mean, this is such a great example of the power law in venture capital in action. So probably from a lot of bets, one of the bets created outsized return that then created the fund that then you can go and do multiple bets to find like the next outsized return. And then you guys invest early stage. So as early as possible, first ticket or seed, Series A, how do you look at it?
So we want to invest as early as possible. So it can be pre-seed, seed. We'll do Series A as well, but typically that's companies we've seen in the past. Maybe we start on the pre-seed, the seed, but we know we've seen the story. Then we'll invest at the Series A. So the focus for the first check is really as early as possible. Focused on great entrepreneurs wherever they are.
Got it. And how do you structure the fund? Like, do you have 300 million for US, 300 million for Europe, 300 million? Like, how do you split that and the focus?
It's a soft split. Approximately a third for India, a third for Europe, a third for the US. I think the reality is that the geographies are a bit blurred. So today the India team might invest in Indian founders in the US. In Europe, I think most of the founders we see have kind of one foot in the plane to America already. So if you look at the exposure, I think there's a heavy exposure to the US market. But where we look for founders, I think we spend a third of our time roughly split equally between geographies.
Got it. And also, you mentioned something like the quality of founders. Also, when you met Next Insurance, it was clear to you that the quality of founders is just exceptional. How do you assess the quality?
I think that's a mix of different things. But for me, the best founders, they all had a couple of common traits. But the clearest trait for me was your clarity of who the end customer is. Each time I met a founder that went on to be a great founder, they had a really good understanding of who the customer was and like what kind of what was the persona in detail. If you think like about Lovable as an example, it was very clear that it was like this person who wants to create a business doesn't know how to code and wants a magic wand that will allow them to code. And that's very clear, right? And for next year, it was the same thing. It was talking about this end client that wanted to buy insurance, didn't want to be on the phone. Maybe they were running a gym or a spa, and they wanted to talk to somebody who understood exactly their pain points, and that could just write insurance that was very tailored to their needs. So each time they would talk about this end client with a great level of depth, as is, you could really feel and imagine who would buy this product. And I think that's very powerful. Understanding your client, I think it's one your obvious trait. And then obviously is the kind of like the chip on the shoulder aspect. I think every great founder has something to prove to somebody.
Love that. Understanding the end customer very well, because probably then if you can empathize with your end customer, then probably the value proposition is going to stick, right? Like I think like someone said, like if you describe a problem very, very well to someone that has the problem, they will think that you have the solution as well.
Exactly.
So I think that
And I think there's a difference between, a founder saying, I'm going to build software for hospitals, and somebody who says, I'm going to solve these pain points that your doctors have because they spend too much time on, writing notes and filing documents, etc.
absolutely. And when you invest now, you hear a lot that the SaaS is dead, AI is eating SaaS. How do you invest in companies where maybe the pricing is not yet? Probably some companies have a SaaS pricing still in the startup, and they have some AI layer. Some startups are a little bit more AI native, and they use a bunch of tokens, and the uncertainty if that's going to go up or down. Like how do you look when you invest on, let's say, the price per seat, and more like, let's say, also the pricing is more AI native?
So I think, I don't believe SaaS is dead, but I think mediocrity is dead. And so what I mean by that is, if your software just looks like a database with a nice UI on top, I think you're definitely dead, and that will go away. But if your software that has real data modes and kind of can enrich the data, has data or generates data that nobody has access to, and also if you create complex workflows, right, you integrate it with like 200 types of like tooling, and you really understand the pain points, I think that's where the value is, really. So that's a slightly different take. And I think the price per seat is probably gonna go over time. And I mean, what's great about AI is that people want to use it. It's very addictive. Right? So I remember like talking to some of my portfolio companies, and they had some customers. They could see there was a CFO that was using the AI and like prompting for 10 hours nonstop. So when you see this kind of addiction, you understand why your volume pricing and usage-based pricing makes sense. It's because there's such a hunger in the market. So I think that's where you can really make money, because if you build a great tool, people will use it, and you don't want to stop them.
Mediocrity is dead. I really like that. Maybe we'll put it in the title of the episode. Like when you invest in companies, how do you look at the new equation between buy versus build? What I see right now in the market is that a lot of firms, be that investment banking, private equity, if they need a solution, they will try to build their own. So now it's much easier to try and build your own solution with code than it was before. So then, like, how do you, like, when you make the investment, you look at, okay, but why? I understand that you know your end customer really, really well, but what will stop in the case of B2B for them to try to build their own?
So I think there's a whole layer of companies that will disappear exactly for that reason, right? I think now companies can try to build their own, and I think for a lot of tooling they should. We do as well, and that's just because the tooling they want to replace often is actually just a database with a UI, and that anyone can build. But then I also see companies that they will say, let's try to buy it or to build it internally. and then they come back and they're like, oh, I need authorizations, I need compliance. Oh, I don't want some people in the company to access this. Or I have to worry about my reporting requirements. Or I have to generate reports for regulatory purposes, and I need to integrate with 50 different types of tools because people use different tooling, and the data is sitting like everywhere in the organization. And then they start to think, well, that's really painful to build. You'll have to maintain it as well. So that's when they prefer to actually buy a solution. So somebody who's from a company who's been through that process, has experienced all the pain points, and has like robust systems in place. And I think that's where the market is going, right, towards more complex solutions. And I think anything where there's like compliance needs, regulatory requirements, like sensitive data, etc., that's really hard to build on your own.
So you think it's going to be easier to sell towards the enterprise because the enterprise has also all this compliance and regulatory usually issues or standards, whereas like for SMEs, probably they will try where the also ACV is a little bit low. They will try to build their own.
Yes, I think that's right. And I think also if you're in a highly regulated space and you can't afford to mess things up, I think people will just buy.
Got it. And what do you make of the battle between OpenAI and Anthropic? So, as you mentioned, like OpenAI and ChatGPT was the first mover advantage. It had the wow factor. Everyone was just enamored with the idea that you can talk with your AI, and was really like in the movie Her, right? Where you just talk with it and you just can't believe that actually what it says back, it kind of makes sense. And it also there's the illusion that they have emotions as well, and we get tricked. But now fast forward, you see Anthropic doing just like having a huge product velocity on all the fronts and the adoption. I started with ChatGPT, but now I use more and more Claude. So it kind of seems that Claude kind of they figured something out, but I'm not sure what exactly. How do you see the battle?
I think it's about the quality of the underlying model. So I also shifted to Claude, but I must say it depends on the use case. So I found that Claude was very good for research, right? Claude is very good for coding, and I usually try to use both when I'm building something. And typically, Claude will come up with better solutions and even undo some of the code that was suggested by OpenAI. So I think maybe what will happen is that some models will be used more for specific use case than others, and for some questions, for some pieces of research, maybe you don't need that much of a powerful of a model because you're just trying to get to an answer. But for some other task where you really need deep thinking and deep research, then you'll switch to another model. So I think both will kind of coexist, and maybe that's what will happen, right? People will start to use different models for different things.
And have you tried Grok?
I've tried Grok, but I would say it's been less useful so far. I would say like I'm 99% on Claude today. So
Claude, yeah.
clearly they're having better quality in terms of their model.
And how do you see, let's say, like the future of these models? And you hear now the forward deployed engineer that, on the time of Frank Slootman, he has a chapter in Tape Sucks on how to snuggle with the customer. Palantir adopted a little bit more broadly forward deployed engineers, and now everyone is like, okay, let's use the model, let's go into the company, let's figure out the workflows, and let's kind of build it. And now you have the agents, right? So with OpenClaw, Peter going to OpenAI, how do you see the battle for the, let's say, agentic layer? And do you think that in the background, models will get commoditized and you can just use like different type of open source?
I think we're going to be a bit in a AWS situation, right, where models are getting commoditized. I think we're still in an early adoption cycle, though. So when I see like the FD model, I think that the reason to exist is that we're still on a wave of adoption, right? And people need hand holding, and you need to nudge people towards adoption. But for me, I feel this is becoming part of infrastructure, right? People pay for the AWS, people pay for Anthropic and OpenAI, and that's your infrastructure layer. And it's going to be
Mm.
very profitable for all of those companies. They're going to become dominant. I think this is going to be a few, maybe it's 2 or 3 companies. But if you look at hosting, AWS, is the dominant player, and then you have a few others. But I think that's where we're trending.
Interesting. And also, we mentioned one of the first investments, like Next Insurance. I also saw that you've invested in Stoic, and also Sequoia just came out with a memo about how the insurance market, it's a $200 billion market waiting to get disrupted. I was wondering if through this investment you got a little bit more into the insurance market and the legacy systems, and what do you think the next wave in the insurance market is going to be?
I think so for me, I like insurance because it's a very old industry with a very old practices, and each time I was doing reference calls with the incumbents. You can feel the weight of history, uh, and I think they're- it's difficult for them to hire great engineers, right? It's not a simple
Mm,
industry to work for. They move quite slow. Um, I think for them, change can be very damaging, right? If they have to reinvent their policies, etc., they are at the risk of cannibalizing their existing customers, and their cost base is very bloated. So this is still, I think, a massive opportunity in insurance, even more today than a couple of years ago. Um, just because today you can underwrite better, you can
mm,
acquire customers faster. It's easier to switch. You can optimize the cost base still way faster. That can be on claims or all back office processing. It's still very archaic at insurance companies, but it's a huge, huge market. So even think, and not just insurance, right? If you think about all the ecosystem around insurance, like insurance
yes,
brokerage, the way you buy
yes,
insurance, it's still so old and kind of mismanaged. So I think we'll see more bigger companies in the space, and they're being attacked from all sides. And it's hard. I think it's hard for incumbents to just innovate. So that's
absolutely.
great for startups.
I have a client. It's a private equity firm, and now they're acquiring multiple broker insurance and credit insurance. They've acquired a company in Central Europe. They took it from 200,000 euros EBITDA to about 7 million euros EBITDA, and now they just figure out the playbook. They just attach the technology and AI layer to do the lead filtering, customer acquisition, just to do it faster. And now they just want to expand across Europe. And I was like, and I was in some of the calls, as you say, like with some broker insurance, and I'm like, my God, you still use like pen and paper and forms, and have you tried building an app? Or like the most innovative thing is like they're building an app now, right? which is which is crazy. But I absolutely agree with you. Um, and with this wave of AI, what change, if anything, in assessing investment opportunities?
I think so I think actually a lot, but I think in the past, well, first there's more people building startups, right? So the barrier to entry is actually very low for most sectors. I think it's not true for like regulated sectors and some very highly specialized topics, but as we see from the Lovables and the Cursor, etc., like today anybody can build a company really, really fast. So I think the first mover advantage that's really gone, in my opinion. So you can't invest just because the company is first. Um, I think before I would say I would spend a lot of time with can this company are they good at building? Can I hire good engineers, etc. Spend a lot of time on the quality of the engineering team, and I think that's still important. But more than that, now I focus much more on product depth. than
Mm.
before. And then at the same time, I think go to market, right? It's always been important, but I feel now it's even more important. Like how fast can you acquire customers, and how fast can you build your revenue base? So that's quite different, because the question that everybody asks themselves is, when you look at a company, is like, could I build this in a weekend? And now VCs can code. So I think this is a better appreciation for Moat. Looking at Moats, I think it's going to be the theme for 2026.
Absolutely. And you guys do both B2B and B2C?
We do B2B predominantly. We do some B2C. I think more in India, because it's the kind of rising middle class demographic.
Mhm.
Look at some B2C models. Although today I feel that the opportunity is firmly in B2B in Europe and the US.
And to change gears and get personal, if you had to bet on sectors or trends for the next 5 years, where would you put your chips on?
I think if I think about like a couple of years ahead, I really like robotics as a theme, and I think AI has enabled innovation in robotics. Because if you replace everything by AI, what's the next thing you're gonna look at
Mm.
replacing? And I think that's human labor, right? So today a lot of industries are super labor intensive. I think I'm particularly excited of what exists in healthcare, for example. I think pharma and labs, etc., is still very manual manual work intensive. So I think for me, pharma and healthcare is one sector I would bet on. Uh, I think industrials, if you look at the biggest companies in the world, are non-tech companies.
Hmm.
Them are industrial companies. You can easily find companies with hundreds of millions of revenues that are very old school. And I think those companies are, they're ready to be disrupted now. So that's also where I would place my bets. Any big industry that hasn't been touched yet, I think is exciting.
Exciting. And what's something you wish you'd known earlier in your career?
So So it's interesting, because I was lucky to have a great investment very early in my career, and then after that I thought I could predict the future.
Mhm.
But, I know exactly where industries are going. I started to become very self confident about my predictive abilities, uh, and then I realized I was completely wrong, and that nobody can predict the future. So then I went kind of back to my roots and started to refocus on founders. And I think there's only one thing you can control when you're investing at seed. It's the quality of the founders. The rest, nobody can predict the future. And if you get it right, it's just pure luck. So for me, it's been, you know, the lesson was like, stick to the basics and stick to what you can really assess. And for me, that's kind of like, quality of founders.
Love that. And what's a book that had an outsized impact on you? I can name one is Kings of Shanghai. If you haven't read it, it's great.
I actually, we touched a little bit on that, but so there's a book called The Art of Learning by Josh Waitzkin, who was a chess
Yes.
prodigy, uh, and so he was I think he was U.S. chess champion, and then he decided to quit and completely switch gear, and then he became the world champion at Tai Chi, pushing hands. Uh, and then he tried to repeat the same thing in Brazilian Jiu Jitsu. But his whole kind of vision was that if you are great at something, you can learn those patterns and those mechanics and be great at a lot of other things as well. So for him, it was basically his vision was that there's a learning itself. You need to learn how to learn, essentially, and that's been valuable. I read this book very early in my kind of my career, and then it's impacted me dramatically. And I think kind of like looking back and then understanding that failing is also a learning process, and how you kind of should collect information based on your mistakes as well, and constantly strive to self-improvement and just improve gradually all the time. Yeah, I think it's my favorite book by far.
Great book. I remember after I finished reading it, you have that moment where you kind of finish reading something and it's just so good that you just know you have to read it again. So it's always like on my reread list, and not a lot of them kind of make it. And the last question: if you could put a billboard outside of every founder's co-working space, what would it say?
I think I would say it's the job is not to be right; it's to find out faster than others. Um, and that's because I think you iterating and the speed of iteration is the key to success. And you just don't have to be right. You just have to constantly, iterate, experiment, talk to customers, collect information, etc. And I think that's even more important in today's world. So I always tell your founders, you don't have to get everything right at the same time. You just have to figure it out really fast. So that's the trait actually I value the most in entrepreneurs.
Learning velocity.
Yes.
Yes. Wonderful. Thomas, this was an absolute pleasure. Thank you so much for taking the time.
Great. Likewise.